All right, for some reason, Visa and Mastercard are like two of the stocks that are most commonly compared, and I think it honestly is kind of stupid that they are. Like both are really good businesses regardless, but people always like to compare which one is better. It's like it's the same exact thing, dude. Like, what do you expect? It's like Coke and Pepsi when you're looking at like actual soda. What do you expect here? It's pretty much the same thing, but there are a few tiny differences. So today, this was recommended over on the Discord, link in description under the video ideas segment, Visa versus MasterCard. So today I'm going to be analyzing both their companies, their financials, giving you guys a fair, unbiased conclusion. And you guys should subscribe to the channel right now. On this channel, we promote real man's investing. We actually earn every single dollar that we get here on the channel. There's no handouts from mommy and daddy. So if that sounds like a plan to you, good blue collar dividend stock investing, real man's investing, as we like to call it, make sure to do that. All right, let's get into it regardless, though. So Visa, stock ticker V. The one qualitative difference, really the big one, is the bigger market share that Visa has. That's kind of the one big outlier from a lot of like analysis that people do. But both companies have very similar characteristics, qualitatively speaking. Great pricing power, free cash flow growth, both have solid management. Everything you want to look for in a core holding in a long-term portfolio, whether you're a dividend investor or not. Right now, though, Visa is trading at $269.78. It's been did a decline recently. I honestly think it's around fair price right now. If you don't own any, I think it's long term should be looking at a fair price right now, as long as they continue producing some solid cash flows. We all love cash flow here on this channel. Yeah. So essentially, the nice thing about Visa as well is that I always talk about is that they continually grow their earnings at such a pace where like the stock price can continue to go up over time, and as long as they keep growing their earnings, the stock actually gets cheaper, which is absolutely wild. Like we could see in 2022 when it was trading at like $205, $180 P ratio 23. Now we can see it's at 26, obviously a little higher, but still they continue to grow their earnings at a really solid rate. We can see even though a few years ago the annual price to earnings chart that was quarterly, we can see 2021 38 price to earnings ratio. Now it's at 27. Guess when it was trading higher in price, now. So Visa is really an awesome company in the sense that it can actually do that. It can really, manipulate its earnings by, you know, continually growing their earnings. Really, just quality business. You look at the highest quality business in the entire world. Visa and Mastercard have to be up there. It's really remarkable when you look. Essentially, their payment processing network is where they get the most of their money. Every time somebody makes a payment through Visa or MasterCard systems, those are the two big ones. You got to pick one or the other. There's not really any third party competition yet. They get a chunk of that purchase. So that typically the business has to pay, but I know that sometimes it can be passed on to the consumer. Really good business in a recession or tough economic time where inflation could be higher, easy pricing power. People can't say no. Looking at their price to free cash flow as well, we could say, continual, same trend as the price to earnings ratio, continue to go down over time as their earnings have improved. So all positive stuff from there. Visa also buys back shares at a really nice rate. We could see, regardless of the valuation they buy back shares, it would be nice to see like a dip on Visa, not only from an investor perspective, where I could pick up more at a really good price, also if they could ramp up those buybacks, great shareholder value. You want to see companies that buy back shares over time, and that's what Visa's done. They also pay a really nice growing dividend as well, with the recent increase of being 15.5%, and it appears that trend will continue. Really strong dividend growth. Obviously, dividends are not free money. A lot of people like to say dividends are free money. Technically, it's passive income, but all your capital gains are, so you're not working for them. So, but overall, very good stuff. Their payout ratio, if that really matters to you, payout ratio has definitely been sustainable for the last few years. Sub 20%, just awesome there from the free cash flow. EPS payout ratio, very similar as well. I pay more attention to the free cash flow. That's more indicative of how the company's earnings-wise are doing. Based off of the net income, though, just for accounting reasons, it's also looking solid as well. But both, when you're increasing your dividend 15-20% a year, doing buybacks on top of that, 2% buybacks, and you continue to keep the payout ratio sub 20%, that's just absolutely awesome. That's just shows that's crazy. Now, will they be able to continue that for 50, 60 years? I don't know. They're an awesome business, but, I wouldn't rely on an 18-20% dividend hike every year. If you're a long-term investor, you're a compound investor, as one could say. Revenue growth, really good as well. Revenue doesn't mean anything if the free cash flows, and then the free cash flow is literally a compound investor's wet dream, as one would say. Just awesome growth there. 5-year growth rate of 12.41%, 10-year growth rate of 25.7%, and a 3-year growth rate of 28.7%. That's wild. I mean, that's absolutely wild. We got to keep in mind, obviously, it's very easy to say a company is great when they're making awesome execution like this. They're performing really well. But it's hard to say that when, maybe they have one bad quarter or one bad year. And I think that could actually impact the company a lot if, they somehow fail for one year, people are spending less money. Visa stock goes down. I think there could be a big overreaction. And I would love that a lot as an investor. All right, so we love Visa stock a lot here on the channel. They also don't carry a lot of debt at all compared to like their free cash flow and earnings. So definitely not something I'd pay attention to. I also do believe they had a couple acquisitions recently. Somebody might want to fact check me on that, but they also did have some acquisitions. All right, Mastercard, lower market share. That's the big thing, qualitatively wise with them. They have the lower market share, so I guess people are banking on bigger growth potential there. I'll show you guys a picture of the market share really quick when it comes to buy credit cards. They do not make money off of credit card, points or interest off credit cards. That's fake news. I don't know where you heard that, but look at the market share there by credit cards in 2022. Visa has the big chunk, Mastercard 27%, and then by payment processors where they really get their big money, as I mentioned, it's really just Visa and Mastercard. Those are big companies. But I'm telling you guys, like, this is identical, like the identical same company when it comes to like earnings. It's absolutely insane. MasterCard currently trading $455.39, P ratio of 38.46, and a dividend yield of 0.58%. Very, very similar. Looking at their price to earnings ratio, because if the P isn't 3, it ain't for me, as one would say. We can see once again it's like very similar to a company like Visa, where they just grow their earnings so well, where even if the stock price goes up, even if that stock price is higher than it was 5 years ago, whatever, it's still technically cheaper because of how efficiently they've grown their earnings. So, all very positive things seen here from the earnings growth of MasterCard. They also do buy back shares. Really, it's wild how similar these companies are. Dividend growth, very similar as well, with a 15% hike recently. So there you go. It's really good compounding dividend growth. Payout ratio as well, 18.59%. It's like the same thing as Visa. It's absolutely wild. I think it's so stupid that these stocks are both being compared to each other. There really is no difference there besides the market share, which Visa has. I don't know if you want to call it brand power, it's the same thing. And then free cash flow as well, pretty much same thing. Free cash flow, most important metric in any business. Current free cash flow yield of 2.88%. All right, what's the conclusion from this video? Both are really, really good businesses. I'm personally in Visa just because the market share is bigger and it was more of an appealing opportunity a few years ago. But I think both are awesome businesses. I'm likely to stay just in Visa, but I don't know if something happens with MasterCard, something catastrophic happens that sends them into a short-term decline, I will be buying. All right, if you guys appreciate the little overview analysis, whatever your little heart wants to call it, make sure to smash the like button for me, subscribe, and of course, turn on post notifications. Do dividend stocks, not drugs. Do what the sign says back there. All right. Thank you guys for watching. Smash the like button. And of course, do dividend stocks, not drugs. Have a good one.